Welcome to my channel. Today's class is about the uses and importance of financial statements and also the limitations. Financial statements has certain uses. The first use is report on the stewardship function. Financial statements reports the performance of the management to the shareholders. The gap between the management performance and the ownership expectations can be understood with the help of financial statements. Then, second use is basis for fiscal policies. The fiscal policies, particularly the taxation policies of the government, are related with the financial performance of the corporate undertakings. The financial statements provide such inputs for industries, taxation and other economic policies of the government. Third one is basis for granting of credit. Corporate undertakings have to borrow funds from banks and other financial institutions for various purposes. Credit guaranting institutions take decisions on the basis of the financial performance of the undertakings, whether they should give the loan or not. Fourth one is basis for prospective investors. The investors include both short-term and long-term investors. Their most important consideration in their investment decisions are security and liquidity. Liquidity means easily converted into cash of their investment with reasonable profitability. Financial statements help the investors to understand the long-term and short-term solvency as well as the profitability of the concern. Fifth one is guide to the value of investment already made. Shareholders of companies are interested in knowing the status, safety and returns of their investment. They may also need information to take decisions about the continuation or discontinuation of their investments in the business. Financial statements provide such information to the shareholders in taking such decisions. Sixth one is aids helps the trade associations in helping the members. Trade associations may see the financial statements for the purpose of providing service and protection to the members. They may develop standard ratios and design uniform systems of accounts. Helps the seventh and last use is helps the stock exchanges. Financial statements help the stock exchanges to understand the extent of the transparency in reporting on financial performance and enables them to call for required information to protect the interests of the investors. The financial statements enable the stock brokers to judge the financial position of different concerns and take decisions about the prices to be quoted. Then there are certain limitations of financial statements. First one is do not reflect the current situation. Financial statements are prepared on the basis of historical cost, past cost. Since the purchasing power of money is changing, values of assets and liabilities shown in the financial statements do not reflect the current market situation. Second one is assets may not realize. Accounting is done on the basis of certain conventions, certain principles, certain things. Some of the assets may not realize the stated values. If we sell, we cannot get the correct values as the stated values. If the liquidation is forced on the company, assets shown on the balance sheet reflect merely the unexpired or unamortized cost. Then bias. Financial statements are the outcomes of recorded facts, accounting concepts and conventions used in personal judgments made in different situations by the accountants. Hence, bias may be observed in the results. May not be accurate in the financial statements. Results may not be accurate. It may be subjective, and the financial position depicted in the financial statements may not be realistic. Then fourth one is aggregate information. Financial statements show aggregate information but not the detailed information. Hence, they may not be much help for the users in decision making. Then fifth one, vital information missing. Balance sheet does not disclose information relating to the laws of the markets, etc., which have a vital bearing on the enterprise. No qualitative information. Financial statements contains only monetary information, money related information, but not qualitative information like industrial relations, industrial climate, labor relations, quality of work, etc. Then last one is there are only interim reports. Interim reports means reports prepared between two accounting dates, two balance sheet dates. The statement of profit and loss discloses the profit and loss. Profit or loss for a specific period does not give an idea about the earning capacity over time. Similarly, the financial position reflected in the balance sheet is true at that point of time. Likely change in the future period is not shown. That's all for today. We have finished this chapter. We will meet in the next class with a new chapter. Thank you.